Let's start with the basics. A short squeeze is a wild event in investing. If you think a price will drop, you borrow and sell, hoping to buy it back cheaper. That's shorting, but if the price rises, you scramble to buy it back before losses get worse. When many do this at once, prices can skyrocket. That's a short squeeze. You might have heard about GameStop. Social media sent the price soaring and hedge funds lost billions. But silver is a precious metal, not a video game stock. Its market works very differently. Stocks are shares in companies. Silver is different. It's a physical metal you can actually hold. The silver market is much older and bigger than most stocks, with its own global trading rules. You can buy real silver, like coins and bars, or paper silver, contracts promising future delivery. Most contracts are settled in cash, not metal, making it hard to know how much silver backs trades. The amount of paper silver can be much larger than the real metal in vaults. Because of this, some believe the silver market is easier to manipulate. So why did people believe a silver short squeeze was possible? It started with the idea that big banks and funds were short-selling more silver than actually existed. If enough people bought real silver, the thinking went, there wouldn't be enough to go around. The price would explode as banks scrambled to cover their positions. This belief grew online. Forums like Reddit's Wall Street Bets and Twitter buzzed with talk of breaking the banks. The plan was simple. Buy silver coins, bars, and shares of silver funds. If enough people joined in, they could trigger a squeeze, forcing the price sky high. Silver had already seen wild swings in history. Back in 1980, the Hunt brothers famously tried to corner the market, sending prices to record levels. The silver squeeze crowd hoped for another moment like that. People looked at the price of silver and saw opportunity. Unlike some sky-high stocks, silver seemed undervalued. The dream was to make money and shake up the system at the same time. It was financial rebellion, fueled by social media. In the middle of all this, a whistleblower stepped forward. His name was Andrew Maguire. Maguire was a former trader who claimed the silver market was being manipulated, deliberately pushed down by big banks like JP Morgan. He said they did this with huge paper trades that had nothing to do with real silver. Maguire shared his evidence with regulators and even testified to the United States Commodity Futures Trading Commission, or CFTC. He described spoofing, where traders place fake orders to move the price, then cancel them before they're filled. This, he said, was happening on a massive scale in silver. His story caught fire online. Videos and interviews with Maguire spread quickly. Many believed he had proof of a long-running conspiracy to keep silver prices low. He said, when enough people demand real silver, the game ends. But others were skeptical. Was this real manipulation, or just the normal chaos of big markets? Maguire's claims fueled the silver squeeze movement, but they also raised tough questions about what was really going on. The most famous silver short squeeze attempt happened in early 2021. Inspired by the GameStop drama, thousands of people flooded into the silver market. They bought coins, bars, and shares in the largest silver fund, SLV. Some dealers ran out of physical silver. Prices jumped, but not as much as many had hoped. At its peak, the price of silver rose nearly 10% in one day. Social media lit up with excitement. Some cheered that the banks were finally getting squeezed, but soon the price settled back down. The silver market was simply too big and complex for a quick win. Banks and big funds still held most of the cards. There were reports of record inflows into silver funds, but it wasn't enough to spark the panic buying seen in stocks like GameStop. The silver squeeze made headlines, but it didn't break the system. This attempt proved something important. A few viral posts can't move a giant market for long, but it did shine a light on how the silver market really works and who controls it. So, was the silver market actually manipulated? Banks said no. They argued that big moves in silver prices are just part of normal trading. The CFTC investigated claims, but found no clear evidence of illegal manipulation, at least not enough to charge anyone. Experts were divided. Some said the market is too large for any one group to control. Others pointed to odd trading patterns and agreed with whistleblowers like Maguire. The truth, as usual, is complicated. Markets are messy. There are always rumors and surprises. Insiders at major banks insisted they follow the rules. But leaked messages and past scandals, like the 2010 London whale incident, showed that even big players sometimes bend the rules. The silver squeeze debate revealed just how little most people really know about what happens behind closed doors. In the end, the whistleblower's claims made people look closer at the market. Even if the big squeeze didn't work, it forced some tough questions about transparency and fairness. History is full of wild stories about market manipulation. The Hunt brothers in 1980 almost broke the silver market. The recent GameStop saga showed the power of the crowd, but real change is slow. Markets are complicated, and the rules keep changing. The 2021 silver squeeze didn't upend the system, but it proved that ordinary people can make noise. Whistleblowers like Andrew Maguire remind us to question what we see. Regulators keep promising to watch more closely, but big banks still have huge power. What happens next? Some warn that new technology and social media could make future squeezes bigger or more dangerous. Others hope more transparency will make markets fairer for everyone. One thing is clear: the fight over silver is far from over. The silver short squeeze taught us that markets are never as simple as they look. Whether you believe in conspiracies or not, it's smart to ask questions, look for evidence, and never take anything at face value. After all, in finance, surprises are always just around the corner.